us then is Kevin Piccoli, who's Deputy Director, CFTC, and joins us now to answer questions about what India can learn from the U.S. markets and how is it growing great here. Mr. Piccoli, hi, great having you, sir. What is your sense? Because the Indian commodity derivative markets, while it started in 2003, the progress has been quite slow. The last 1 year, of course, has seen a lot of stuff happen. But what is your sense? What is the kind of growth that you oversee for the Indian markets?
Well, I think the commodity markets in India have a tremendous opportunity to continue their growth and try to capitalize on a lot of what has been done by the folks at SEBI and the government in terms of looking at how to improve regulations and how to help the economy, the farmers, and the end users to develop their product and take it to market.
Also, Kevin, what do you think is the next step for India? What we do really need to do to get in better participation and get in a better role from the government and regulator as well?
Sure, that's a great question. So I think there are a couple of things that come to mind. One is education on all sides, whether it's the regulators, the politicians, the farmers, the speculators, the people in the market, to really understand the intricacies of futures trading, how it works, how delivery takes place. I think that basic level of understanding will help everyone create that confidence in the marketplace. So that's certainly one thing there. I think India has a lot of great things to offer on the commodity market, whether it's agricultural or the gold and silver, the metal markets. There's a lot there, that they have available. I think it can help out Asia as well in terms of there's exports in excess in other countries that a strong futures market in India, I think, can help support the economy and help it grow and continue to grow further.
Kevin, also, how would you look at on what India could really take away as an advice from CFTC right now? And what commodities, what products do you think work well for Indian markets? Because we've seen bans, suspensions in contract specifications in recent past. How do you think we make up for that?
Yeah, well, which market, that's always a tough call. I think the important thing is that whatever markets get developed first are the ones that can be successful. Because the worst thing that could happen is you come out with a contract that just fails, and then people lose confidence in it. They don't want to try the next commodity that comes along. So I think it's just a matter of working with the government, working with the regulators, with SEBI, the industry, and the marketplace to fully understand exactly what the key criteria are to have a successful contract, design that contract in an effective manner, and then bring it forward. And whether that's wheat, soybean, gold, silver, I think the key is, what does the market want? What's going to be successful? I'm not as familiar with the intricacies of the Indian market to give you any insight into which one I think, but I would just say, work with the market participants. They know the best, and get a round table together, talk to people, design a contract that people will adhere to and say, yeah, this is a good contract, and it can be successful.
All right, so that really is the view coming in. An exclusive conversation, of course, with Kevin Piccoli, Deputy Director at CFTC, who says that it is important to get all the stakeholders on the table for having a very transparent, strong price discovery, if that is what the commodity markets in India are looking at.